Today, we see stocks coming down a bit in the S&P 500, once again closing below the rising wedge. After Trump's decision tonight, is Jay Powell's FOMC plan in trouble? Now, when we come over and look at how the indices fared across the board today, the Dow was down 299 points. The NASDAQ was down 180 points. S&P 500 down 50 points, with the Russell 2000 being down 2.21. We come over and look at advancing issues versus declining. We had 71.1% of issues declining on the day. And when we come over and look at the sectors across the board, only one sector was in the green: energy. So what does that mean? Well, if we come over and look at a chart of crude oil real quick, we saw yesterday crude oil coming back down. Today, crude oil up 2.35%. We put this on a 5-minute chart, and you can see we're closing very close towards the session highs out here today. We also saw the fear and greed index actually move over into neutral territory with a reading of 55. The previous reading was 62. Then we couple that with, we look at the volatility index, the VIX today up 12.92%. Now, one thing to keep in mind, when the VIX closes above 10%, that indicates the next 1 to 2 trading sessions likely going to be an up day in the market. So will Jay Powell be able to save the market out here tomorrow? Because when we look at this article right here, stock market today, Dow falls over 350 points, S&P 500 and NASDAQ near session lows after Trump calls for Iran's unconditional surrender. Now, this is going to be a problem because everybody's worried about the U.S. being dragged into this conflict, and now more and more U.S. assets being moved into place. And that comes right as we have the FOMC coming out tomorrow. Then we look at this article right here. Fed's inflation fight isn't over yet, says former number 2 at the central bank. So why could the inflation fight not be over with yet? Well, it's very simple. One, if crude oil continues to rocket on the way up, that has been one of the contributing factors of a lower CPI report. With crude oil going up, what happens when that starts causing the inflation numbers to also go up? Higher crude oil prices, higher energy prices is also going to make it higher prices for us, the consumer, because it's going to cost a lot more to ship products. Now, with tomorrow being the FOMC day, traders focus on chance of just 1 rate cut in 2025 or 0 due to tariffs in the Middle East. Now, keep in mind, July 9th is going to come up very quickly. July 9th is the 90-day pause deadline. And when we look, we're about 21 hours away from the next FOMC meeting. We come over here and we look at the odds. We can see the market's not priced in the first rate cut until September. And we look at December, there's a 40% chance we'll have a second rate cut. Let me know in the comment section down below, how many rate cuts do you think the Fed is going to give us out here in 2025? Now, when we look at the economic calendar tomorrow, not only do we have the FOMC meeting, but 8:30 tomorrow morning, we have the weekly unemployment claims. And lately, that has been coming in a little bit hot. If we look, last time it came in at 248,000 with a forecast of 242. The prior reading came in at 247 with a forecast of 236. The prior time before that, a reading of 240,000 versus 229. So are we about to see another increase in the weekly unemployment claim filings? Then tomorrow at 2 p.m., we have the Fed funds rate coming out. And if you trade with prop firms out there, you need to know, do they have a tier 1 news event? The FOMC Fed funds rate at 2 p.m. normally is a tier 1 news event. Now, speaking of prop firms out there, I want to let you guys know right now, Apex 80% off all their evaluation accounts. My Funded Futures 50% off new users, and for existing users, you get an evaluation, you pass it, you get an evaluation for free. For those who prop firms, use code Mike. Last but not least, Take Profit Trader, 30% off all their evaluation accounts, and best yet, no activation fee. For Take Profit Trader, make sure to use code Epitome at checkout. Now, something else I want to warn you guys about tomorrow. Not only is it the FOMC Fed funds rate at 2 p.m. that comes out, and we also get the economic projections, but at 2:30, Jay Powell is going to take the podium. You better believe he's going to be getting asked questions about all the tensions going on in the Middle East. Now, is everything going on in the Middle East going to be the catalyst that actually drives the stock market lower? Right now, we see the MACD indicator does have slightly a bearish cross, but for all intents and purposes, it's basically flatlined above the 0 line. We'll see if we get follow through tomorrow. Keep in mind, we have a big, large gaping gap right down here at 564.13. So if things start to get more unhinged over in the Middle East, that can send things spiraling out of control. On the 4-hour chart, the MACD indicator is starting to get more and more bearish, and we're going to see, can we make it down towards this area about 590.61? Jumping over, look at the 30-minute profiles real quick. Notice we're closing near the lower end of the range. We made it all the way down, filling the gap from yesterday. Now, if we do start to bounce up, one of the areas we do want to watch is going to be this minus development area, anywhere from about 598.39 to about 599.17. I'm going to go ahead and zone this out real quick. This will be a point of interest tomorrow. And if we can get through that area, then I'd want to focus on value area high. Then I want to focus on the gap being filled. Now, speaking of gaps out here, if we look at the gaps today, Russell 2000 did not fill the gap. We look at the Qs, did not fill the gap. However, we look at the Dow Jones. The Dow Jones was the only one of the 4 indices out there that were able to fill the gap. Now, when we come over and look at the futures markets real quick. Now, when we come over and look at the 4-hour chart with the weekly volume profiles, this week has been amazing. We had a rotation on the way up. We had the rotation all the way back down through the weekly volume profile areas. Right now, we are currently trading below last week's value area low at 6,060.50. Now, tomorrow's going to be critical. We have the Fed coming out. We have plenty of opportunity for volatility out here. So if we pull a Fibonacci retracement of this move up that we've had this week, notice we're already below the 61.8. If we start breaking the 786, highly likely we're going all the way back down towards the lows of this week. We break that, we're going back down towards the lows of last week. Then we better watch out, because then those other lower targets, aka gaps being filled in the futures markets, then start to come in play. Now, when we come over and we look real quick, one of the ABC patterns that we drew out today during the live stream. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. But here it is, the A to B leg, the B to C leg being the corrective leg. We have the completion of this pattern down here at 6,017. We did not quite make it down there. Then as we came down, notice right where we came back up towards the day. If we map this out, basically a structure breakdown point, we broke out, boom, pop back up. Now we're on the way back down. Now we're right now currently slightly above value area low, which comes in at 6,034. The point of control is going to be right above us at 6,040, with value area high being up here 6,068.50. So tonight, if we start breaking below value area low and we start coming back up, I want to target the point of control. I want to retarget this structure breakout point. Then anything above that, I want to turn my attention towards value area high, then back up here towards 6,081. Then we break that, we're going back towards the highs from the prior day. Now, if we break value area low and we stay below it, then I want to turn my attention towards 6,017 and see, can we make it down towards that area? Now, before we come over and look at the NASDAQ, I want to take a look at the bonds real quick. 10-year bond also on the move lower. Why is that? Well, when there's fear out there in the market, or fear starts to creep in, what do? They flee to safety. And in this case, they're fleeing in the bonds, helping pressure rates to go lower. Now, that is favorable out here for the bulls. And we'll see if Jay Powell can deliver for the bulls again tomorrow, or if he's going to crush their hopes. Now, we come over and look at the Qs real quick. Qs also below this rising wedge, and we're going to see, can we start to get some more follow through? We have a gap right over here that still needs to be filled, 509.16. Then this other gap comes into play at 487.83. Next, we go over to the 4-hour chart, MACD indicator. You can see the bearish cross. If I zoom this up, you can see as we came up towards these highs, the MACD indicator clearly was not at these previous levels or even close to it. The MACD indicator was giving us a heads up. Momentum to the upside was starting to wane off. Now the question is, are we going to make it all the way down towards the zero line? At this moment, it kind of looks like that may be the case. Coming over and look at the 30-minute chart real quick. Notice we're closing in the lower area of the range. Now, an area I do want to pay attention to tomorrow is going to be this minus development area. And that's going to be somewhere in the ballpark of 530.05 to about 530.55. Now, notice one of the other areas that we had mapped out on the chart, we came right down to today. Then we ended up rejecting back out. Now, if we can stay above value area low tomorrow, then we're probably going to rotate all the way back up through value area high, rotate up, fill in the gap that was left behind from today. However, if Jay Powell disappoints us tomorrow during the FOMC press conference, watch out, lights out. We're going to start to get correction underway. Now, as we come over and look at the NASDAQ futures on the weekly profile, we've also had a complete rotation all the way up, all the way back down, and now we're currently sitting below last week's value area low at 22,043.5. Now, if we also pull a Fibonacci retracement from the low of this week all the way up to the high, notice we've come down to 61.8. If we start breaching that level, the 78.6 is the next logical area. We breach that, we're probably coming all the way back down towards the low. However, if we start to turn anywhere from this area, from the current low, or down towards the 78.6, then we have a potential for an A to B equals C to D pattern. Now, if this low from this afternoon holds, that would give us a price completion all the way up here, 22,405. Jumping over and look at the daily profiles on the 30-minute chart. Here's an area that we had mapped out today on the live stream. We were talking about it all morning long. That was basically right up here at 21,915. If you guys were on the live stream, you guys heard us talking about that. And we kept talking about this consolidation that we had forming. This was all calls being built. Now that we have completed the ABC pattern, and then basically you draw it just like this, the A to B leg, the B to C leg, and then the D leg would complete right down there. That's how we came up with that price target. Also, if you look at this shaded area on the chart, something we talked about yesterday was we had a P as in Paul shaped profile. And if we broke below value area low, highly probable we're going to come back and revisit the lower third of the range. Today on the live stream, I talked about the candle body to the candle body right down here is how we basically came up with that zone. Then we also had that ABC pattern completion. If we clear off all the drawings, notice the NASDAQ closing well below value area low at 22,021.75. So tomorrow, the following day, highly probable we're going to come back and at minimum test that area out. Also, it's going to be a structure breakout point as well. And we break above that, then the point of control becomes into play, 22,088.75. We breach that, then we're looking at 22,128.25. We breach above that, then we're looking back towards the highs coming from June 16th. Now, if you want a more clear understanding of the drawdown with Take Profit Trader, make sure to watch this next video right here.